It is something we all have to purchase as drivers, car insurance. And what you're shelling out for that insurance can depend on what kind of vehicle you have, your age, and where you live. But did you know your credit score can affect how much you pay? While using credit scores to determine insurance rates is illegal in a few states, in Utah, it's fair game. Fox 13 News consumer investigative reporter Robin Ogunye found out how much more money you might be paying even with a perfect driving record.
We're on the road a lot. By Harvard Health Watch's numbers, we'll spend nearly 38,000 hours driving during our lifetime. We spend that time with what can be an expensive passenger, car insurance. The amount you're paying for that insurance isn't solely based on your driving record.
The problem is we're being charged based on things that have nothing to do with how we drive, but instead have to do with our personal financial circumstances. And when the government is requiring us to buy a product, we should be free to buy that product at a fair price based on how much risk we bring to the road.
It's the latest in the uncovering of what some states are calling discriminatory pricing of auto insurance. States like Washington and Kentucky are taking a closer look at state insurance department practices. Washington pursuing litigation. Doug Heller, the director of insurance for the Consumer Federation of America, explains how Utah is no stranger to using credit scores to upcharge drivers.
In Utah, they're all allowed to use this credit score, and they use it to varying degrees. Some might charge a 80% penalty for somebody with low credit. Somebody might charge 130% penalty. Either way, you're paying dramatically more.
So how much more could you be paying based on your credit score? We looked at the Consumer Federation's numbers for Utah. In Utah, just to buy the bare bones auto insurance policy that's required by state law, you end up paying about $200 more a year if your credit is fair rather than excellent. If you have poor credit, you end up paying about $600 more a year for the same basic policy.
Our credit worthiness is like a sticker that tells us how much more we're going to buy from them. Because people with higher credit tend to have more wealth, which means they're going to be more likely to buy a home insurance policy and a life insurance policy. And maybe they'll sign up with their bank account that the insurance companies have in their affiliates. And that's what the insurance companies are interested in.
I asked what it would take to change the car insurance pricing landscape. Heller says without the action of lawmakers, there's not much that can be done.
It's been the very powerful lobbying influence of insurance companies that has kept this practice alive for a fairly long time.
So what can you do to make sure you're getting the best rate for your car insurance? The Consumer Federation tells me to shop around every 3 years or so. You're bound to find something cheaper. While many people think they're getting a loyalty discount by staying with their longtime insurance company, Heller says that discount doesn't do you any good if it isn't as much savings as you would get if you went to another company. Live in studio, Robin Ogunye, Fox 13 News, Utah.